With summer 2024 on the books, traders can reflect on the past few months with great fanfare. Every American alive got their social security number leaked in the biggest ball drop ever. An unspecified country used pager bombs to counter-dunk on another unspecified group, and Deadpool and Wolverine finally had it out. And for true men of culture, Soul Reaver 1 and 2 are finally getting remastered. But to the mad lads at WallStreetBets, such irrelevant world events are just background noise among their eternal quest toward wealth. As federally appointed market pumper Jay Powell once said, "We move markets like Escobar moved Charlie. For life without gains is nasty, brutish, and whack." My brethren, let's dive face first into this pumpkin pie for the dankest trades of Spooktober. Setting sail with number 5, we meet Gwyn Singh, a rural Indian Sikh in his late 20s from a farm outside the city of Chandigarh in northern India. This man's Reddit journey started as a pretty typical one, from uplifting stories about hardworking artists in our India, to fawning over vampire Elijah Michelson from some Twilight knockoff show. Later in May 2023, Gwyn Singh found himself venting about the grind on our anti-work, and was apparently undergoing immigration to the land of the free by late 2023, as he was hunting for Sikh communities in North Carolina. He also sought a means of bringing his parents to the US, but since they are not Hispanic, they needed paperwork, which slowed down their journey. Our man's cross was to carry his family's welfare on his back, and to do so, G-String knew he couldn't do the traditional American dream blue-collar work of the 1950s. In this new age, a man needs stonks to propel him to new heights. He had meticulously carved out a plan to make steady, long-term gains to protect his and his family's future by investing in indexed ETFs like a sophisticated man of culture. Over about 4 years, Gwyn saw slow and steady growth with this conservative approach, driving his portfolio to a good $23,000, a significant amount for a recent immigrant. But such patience could not last. Gwyn's first comment on WallStreetBets in August of 2024 was a reply to a $1 million gain on ASTS. No doubt, the burdened father saw such life-changing gains and began to feel that siren song. With his money already fully invested, Gwyn threw in a token fractional share of ASTS just to get a taste of what WallStreetBets could truly feel like. But he knew he'd missed the boat on ASTS. What he needed was hot stock tips before they reached the masses. What he needed was a WhatsApp finance group. To the lucky few unfamiliar with WhatsApp finance circles, imagine a cocktail party where everyone is poor pretending to be rich, someone is always trying to pickpocket you, and 80% of guests are the party host's alts. In a world where perception outweighs fact, a message from some guy with a profile picture of a 20-year-old Asian model can become gospel. Gwyn Singh's journey across that threshold began when he joined a WhatsApp group that posted stock market predictions, preying on people like Gwyn Singh by selling bogus stock tips. It was just like a scene out of Wolf of Wall Street, with Jordan Belfort calling Gwyn Singh and saying,
The reason for the call today, Gwyn.
Something just came across my desk. Gwyn Singh, it is perhaps the best thing I have seen in the last 6 months. If you have 60 seconds, I'd like to share the idea with you. You got a minute? The name of the company, Ride Group Ltd.
This company is apparently a Singapore-based Uber for packages service with 34 employees, an ideal investment. Gwyn Singh was skeptical at first. The signs of this being a classic pump and dump were all over the place. However, his confidence was soon lifted to unwarranted levels. A lucky streak involving a series of pump and dumps pumping, coupled with a few gains posts, was enough to change his mind and win him over to the dark side. Gwyn was led to believe that he had found the unicorn of WhatsApp groups, that he had found the one group that isn't just pump and dumps. His time was now. In early September, Ride was in the midst of a massive moon mission, shooting from $7 to $12 in the span of a week. Gwyn saw Ride's liftoff and decided that today was his day. Over the next 2 days, our hot-headed friend opened Robinhood and liquidated his entire portfolio of $23,000 to go full-fisted into the Singapore Uber. And in spite of the skeptics, he printed. He smelled sweet victory when the stock jumped 40% on his first day, bringing his portfolio to well over 30 grand. For all his patience in indexed ETFs, he had now discovered what it really means to print money. Almost 10K had appeared overnight, and while a sane man might take the W and cash out, Gwyn was just getting started. The big gains hit him like a shot of Smirnoff on an empty stomach. Every day was like another spin at the slot machine, and as luck would have it, the next pull brought with it another stack of cash. In a matter of days, Ride had crested $20, and Gwyn had close to doubled his money. Just this short time in WhatsApp finance had outpaced his years of indexed ETFs. The big man started getting those stars in his eyes as he envisioned himself as one of the few who brought his rural caste family to great wealth in the new land. His family could be renewed, built stronger, wealthier, and wiser. All he needed was for Ride to keep doing what it was doing, and that's how fast it happens. On September 11th, Gwyn faced sheer horror. Ride, once a towering bastion of pride in his portfolio, collapsed 50% shortly after market open. He was now staring at a loss, and he only had stop losses in place for an unspecified small portion of his shares. As his portfolio melted down, Gwyn prayed to Ganesha for a reversal of fortune through the rest of the day, but he would have no such luck. By September 11th, there was practically nothing left. His portfolio had been stripped down to the studs. His hopes and dreams for a strong start in the new land were shattered. He was at rock bottom. In the aftermath, Gwyn Singh took to Reddit, as one does, to lament a 97% loss. It was a $40,000 swing that kept him up at night, staring at the ceiling, wondering how he managed to turn years of careful saving that could have been used for more than 10 round trips to India into a smoldering pile of regrets. If that wasn't enough, as of September 14th, he had yet to break the news to his family, but was sure he would piss off his wife adequately when the time comes. But to his credit, he seems optimistic in the comments, committed to using this as a learning point on how to trade better. He also shared some marginally useful advice. He's not going to like it when he figures out that the real answer is just to buy and hold ETFs. Keep that chin up, Gwyn Singh. They can take your money, but not your karma. Now, let's get political with Kalshi. US election matchup between Trump and Harris is right around the corner, and odds are wrapped tight. Kalshi is the first US regulated exchange to allow bets on the 2024 election, with lines as simple as who will win the 2024 election by electoral or popular vote to as in the weeds as who will win the Senate race in Montana. Traders who want to put their money where their mouth is can shoot their shot by placing wagers for or against a certain outcome on election night. If you want to make the big day a little more exciting or double down on the outcome you predict, Kalshi's got you covered. For example, I placed a wager against my preferred presidential candidate. That way, even if my preference loses the election, at least I got paid. Place a wager on the favorite President Mango, or go for the larger win by betting on underdog Kamala Harris. Or if you really live in your own bubble, go for the big 100x on RFK. The ball is in your court, and if elections are just not your thing, Kalshi has lines for anything else you can think of, including economics, climate, science, and pop culture. Join now with my referral link to get a $20 free bets bonus after a $100 deposit and any wager. You must use the mobile app to get the bonus. If you sign up through desktop or a mobile browser, you cannot get the bonus. Make sure you use the app. Thank you to Kalshi for sponsoring, and now let's move on to Dank trade number 4. Next up on the roster is an individual of rising acclaim by the name of Glittering Acadia 774, aka G-Kid. Having joined Reddit in early August 2024, the 19-year-old young buck quickly took an interest in investing, particularly dividend investing. While initially intrigued by this passive strategy, G-Kid called into question the potential returns. In an armor-piercing question, the young chap challenged dividend enthusiasts to explain what the point of dividend investing even is. By his math, investing in a dividend stock like Coca-Cola or Exxon paid a smaller dividend than just holding cash in a high-yield savings account. Why hold for a 2% dividend when you can hold cash for 5%? The question bit hard, and dividend investors bit back in a nuanced exchange. Ultimately, G-Kid was persuaded that there was indeed value in dividend investing, and he picked up a respectable mix of growth and dividend positions. But his understanding was apparently incomplete as his patience waned, as he was next seen dumping his remaining cash into covered call ETF JEPQ. And shortly thereafter, he took an interest in NVDY, which is textbook yield chasing in low-quality, gimmicky ETFs that are sure to lose principal over time. In mid-August, G-Kid also admitted his pivot into dividend positions was at least partly in retaliation for losing $8,000 on Shrek music royalties. This was indeed a real investment opportunity during 2023, in which the platform Public raised $888K selling royalties on the Shrek soundtrack. G-Kid mistakenly believed he was buying royalties to the movie itself. Nevertheless, as one might expect, investing in a 20-year-old movie soundtrack proved a poor investment, and the royalty rights later sold for $137,000 in July 2024. That's an 85% loss of $751,000, 8,000 of which was G-Kid's. Scarred by the ogre, but resolved to proceed more responsibly in his financial journey, our young man's dividend yield chasing was perhaps misguided, but at least he was honest in his pursuits. In time, it appeared his investing strategy would round out to a proper approach, until the 2024 Paris Olympics hit the scene. As a Gen Zer, G-Kid followed social media extensively, and during the Paris Olympics, athletes themselves talked directly to their fans through social media more than ever. According to US skateboarding bronze medalist Nyaj Huston via Instagram, his bronze medal was already looking rough, allegedly due to low-quality copper. G-Kid was immediately convinced that the widespread backlash against copper as a result of this viral criticism would send the commodity tanking in value. G-Kid made a stat assessment. The confident consumer of pop culture promptly sought a way to short the copper market and profit off this elemental tailspin. According to the man himself, he believed that more athletes would speak out against the poor quality of copper in bronze medals, leading to a decrease in mining companies' revenues. He also anticipated going long on silver and gold, believing they would benefit from the copper backlash, as consumers would switch to the better metals. On August 12th, the day after the closing ceremony, G-Kid put his money where his mouth is and immediately ditched all of his dividend positions to reinvest the capital into puts on Southern Copper Corp, ticker SCCO. At the time of purchase, SCCO was trading for a hair above $100, and G-Kid's $100 strike puts put his position effectively at the money, with expiration on September 20th. At this point, all the young man needed to do was wait for more bronze medalists to criticize the quality of copper in their metals, and surely this industrial copper miner would face serious investor backlash. But the days ticked by toward his expiration. Olympians stopped chattering on social media as they put their medals in display cases instead of wearing them around their necks. Surely this reduction in wear and tear disguised the fact that copper was degrading in quality. The copper market dodged a bullet. Within a week, G-Kid's puts shed value as copper prices bounced in the third week of August, SCCO rising right alongside. A week later, his puts were $5 out of the money, and his portfolio had melted down into pennies. By August 30th, the ashamed young man was about to throw in the towel. He revealed that he disregarded naysayers who criticized his play, believing them to be missing the forest for the trees. When SCCO began to rise in the days following his initial trade, he decided to double down on his position by using margin, effectively more than doubling his bearish trade by purchasing $7,400 of puts with borrowed funds. But the copper market was indifferent to his nonsense. By August 30th, G-Kid's positions were completely BTFO, and he was in the red by $8,500 on a $7,000 portfolio. With $400 of buying power remaining, the panicking young man knew he needed to make a move fast, and closing his copper shorts was not an option. In a desperate Hail Mary, he tried to throw it at 0 day to expiration long calls on SPY, praying for an inkling of gains to get his trading back on track. However, he made an egregious mistake and accidentally sold a naked SPY call instead. But Mary left his prayer unanswered. Although SPY closed below his short call, some error in his brokerage account indicated that he was assigned shares anyway. G-Kid believed he was unreconcilably cucked. He mistakenly believed his SPY short call closed in the money, forcing him to buy 100 shares at the market price of $558. Since G-Kid had no such funds to cover exercise, his broker told him that he must buy the shares, and they immediately issued a margin call. As far as G-Kid knew, he was donezo. He closed out everything and switched to a cash account, leaving his position effectively zeroed. In a panic, he turned to WallStreetBets for advice, which is always a good move. Despite substantial dunking, some helpful people told him the actual outcome. His short SPY call expired out of the money, so he would not be assigned 100 shares of SPY. His broker telling him to buy the shares is an egregious error on their part, and closing his SCCO puts and swapping to a cash account was unnecessary. As a result of his broker's display error and his knee-jerk reaction, his whole portfolio would be obliterated on Monday morning, and he would be left with whatever outstanding debt remained, which appears to have been about $8,000. And perhaps the most painful twist of all is that if G-Kid had just held his copper puts, he would have printed. By early September, SCCO was trading for about $95. His $100 strikes would be $5 in the money, and his $95 strikes at the money. His gains would have likely crested 100%. But that SPY short call fiasco had left him positionless and $8,000 in debt to his broker with no prospect of recovery. Between Shrek and bronze medals, our man is on a roll. I'd say the first one's free, G-Kid, but apparently not. Now, let's move on to dank trade number 3. Next up, riding shiny and chrome, is a beach bro by the name of Lox4TW, who recently joined Reddit on the evening of August 31st, 2024. Although he lives in Hawaii, it is unclear if he is a native Hawaiian or just a standard American. The name Lox4TW likely means Lox for the win, lox being a dish of salmon in salt brine common in Yiddish culture. This does not sound like something a native Hawaiian would enjoy, as their cuisine uses significantly less salt. My best guess is that Lox is a boilerplate American enjoying the beach life in Oahu. And to enjoy Hawaii to the fullest, a man needs deep pockets to satiate his desires on the expensive island. Lox shows some understanding of the real estate market and is likely a landlord or real estate agent. But such investments, even when income producing, are generally not that liquid. To add some liquidity to his lifestyle, Lox has taken an interest in the equities market. Immediately after making a Reddit profile, Lox commented on bullish DD about Intel and shared his evaluation of the stock himself. He questioned traders who believe that Intel really is a trash stock and implies that the stock's worst days are behind it. On August 31st, he also appears to have received a visit from the Intel Nana in a dream, a reference to sad nefariousness who blew 300 grand of inheritance on an Intel YOLO. Having been visited by the muse herself, Lox took a short-term call option on Intel, which produced unspecified gains. However, the post is deleted, so we cannot see the play. It's also possible that he never closed the position, as his later trades would imply. Nevertheless, our surfer friend's inspiration from Nana continued to manifest. Over the following month, Lox had Robinhood open every trading day in the early morning hours as he enjoyed his bowls of poke and mugs of cocoa. He appears to have owned a small stake of a few shares of Intel, but became disillusioned by poor performance by September 19th, and he sold his shares as Nana grimaced in spite. However, she promptly visited him once again in a dream to tell him this paper handing was unforgivable. He was to revisit the trade with haste. As the sun rose to greet him on September 20th, Lox was already locked in. It was time to capitalize on something unusual that happened frequently to Intel at market close, around 10 a.m. Hawaii time. At the end of many trading days, especially Fridays, Lox identified extreme levels of volatility on Intel. The stock could easily move a good 2% in the last 30 minutes of trading. To the share trader, this is not particularly remarkable, but to the options trader, this elevated volatility expresses itself through the options characteristic called charm, which in non-nerd terms means options prices move really fast right before expiration. For Lox, charm could be exploited. Before the Hawaiian sunrise on Friday, September 20th, Lox put down what he could afford, a meager $200 with a dream to make charm his bitch. At 5:05 a.m., Lox bought 200 calls at the 21.50 strike for $1 each, expiring at market close. At the time, the stock was trading for $20.40, and option sellers were basically giving away 21.50 calls like free candy, hoping to poach a few bucks before close. But the early riser on the Pacific Island was more than happy to be their weekend liquidity, for he had a plan. All he had to do now was enjoy the sunrise and wait. Granny did not keep him waiting for the exciting news. Just hours later, Intel announced that chip behemoth Qualcomm had approached it about a possible takeover. Shareholders were overjoyed that a capable company might finally take the wheel from Intel's bloated and overpaid leadership. Shares shot up 3% immediately, cruising into a price of about $22.40 in the blink of an eye. In that one instant, Lox's $1 calls were magically worth about $100 each. As the news broke, he had 107x'd a couple Benjamins into over $21,000 without leaving his chair. In celebration, he shared a screenshot of his position while it was still open, with his closing price being slightly higher. He further praised Intel Nana for her inspiration and vowed to use the gains to purchase a large quantity of coconuts for unspecified reasons. Although he muses about 20,000 coconuts, the off-beach price is about $5, indicating a more likely quantity of around 4,000 coconuts. Even at a pace of 1 coconut per day, that's about 12 years supply. And I have to admit, Using YOLO gains for more than a decade worth of coconuts is a lot smarter than some of the other things I've seen WallStreetBets winners do with their money. Enjoy the hydration and sunshine, locks. Let's move on to dank trade number 2. Alright, degens, hold on to your hats because you're about to get slapped with some lore, brought to you by a chap named Necessary Location 778. Our man joined Reddit in late 2024, and after a few months of lurking, his first ever post was to WallStreetBets, indicating a bright future ahead. A chef by trade, Papa Necessary didn't earn much money. His job required him to grind long hours on weekends and holidays to satisfy the needs of unappreciative clientele. But throughout his career, he remained dedicated and focused, not only on deploying culinary expertise, but on diligent, conservative investing. Over an unspecified number of decades, the chef built up well over $500,000 in assets. As he closed in on middle age in early 2020, this was a respectable sum that could substantially pad his retirement. All he would need to do is stay on track. But as we all remember, coronavirus chokeslammed the economy that spring, and unlike the tech sector in which all employees got paid to work from home, being in the food service industry was not the spot to be during lockdown. Everything the chef worked for was at risk, and as the market tanked around him, being diversified into a bunch of indexed ETFs losing 20% per week didn't seem so safe anymore. His livelihood flashed before his eyes. He needed a change to right this ship ASAP. It was time to ditch his supposedly conservative investments and flip his portfolio back to life. But where could one invest when the world seemed to be falling apart? In approximately the second week of April 2020, US equities mostly remained in freefall, but there were a few shining bastions of industry. The lockdown darlings, or companies that actually benefited from people being stuck at home, were booming. Stocks like Amazon and Chewy were printing gains while everything else melted down. How then could the chef earn his money back? The answer was right in front of him. He would buy the Amazon of pet medicine. PetMeds Express, ticker PETS, was the perfect target. His DD was extensive. The big man evaluated the conditions of American culture during the early phase of lockdown and observed that pet owners were dropping mad cash on keeping their furry companions healthy. And because they were bored at home doing nothing but playing Animal Crossing, people were actually buying more pets. This was a slam dunk. Pet owners new and veteran alike would surely be taking advantage of dog medicine delivery for years to come. The big chef sold all his assets and went all in with $475,000, netting him 15,500 shares at about a $31 basis, betting the farm that meds for pets would make his portfolio moon. At first, it looked like he was onto something. The stock inched up as summer carried on with no signs of the pandemic slowing down. His portfolio got greener and greener, and you can just imagine him leaning back, grinning ear to ear, thinking about his soon-to-be millionaire chef status. The next time someone criticized his cooking, he would throw his apron on the counter and storm off into his Lambo, straight to the bank, and then straight to the airport for a one-way ticket to Barbados. But this isn't Disneyland. This is the real world, and here, bubbles pop. Pets reached a high of $40.53 in mid-July 2020 before suffering a few steps back. But the chef held firm, indemnified when the stock enjoyed a Christmas rally to $38 one last time. This was his chance to escape with a W. Instead, he held, and held, and held. All through the choppiness of 2021 when the stock finished at $25, where he had a $60,000 loss. Certainly at no point could he sell in 2022 with his position at a $45 loss, as pets traded for less than $18. Nor at any point in 2023, as the stock continuously declined with barely a green day, deleting its dividend and finishing at a 19-year low of $7.50. Necessary Location was like a frog in a pot of boiling water, refusing to accept that the stock had been in steady decline for years until it was too late. Facing death by 1,000 cuts, he felt he had no choice but to hold on for dear life. And as 2024 dragged on and his investment account dwindled, we must imagine that every chef paycheck income was superseded by a larger loss on Pets shares. By the time he called it quits in September 2024, Pets traded for just under $3.50. His cumulative loss was over $426,000. There are many reasons for holding a struggling stock. Some investors may think the market is overreacting to bad news, which may even present a good opportunity to buy shares. Perhaps some had faith that PetMeds' efforts to reinvest in growth would pay dividends, Or even that aging COVID pets would require more medical attention as they age, forcing owners to place more orders on PetSmeds. Chances are, necessary location was not among the above. With no rationale given for his holding, the default feeling of being afraid to realize losses was likely a deciding factor. Selling at a loss would make this massive L a reality, and if he did sell in 2022 when the stock was $20 for a loss of 33%, only to watch the stock rise back to $40, the pain would be horrendous. When in such a situation, investors must realize that every day they hold a stock, they are making a conscious decision to invest in that stock that day. Taxes aside, if you have $300,000 in cash or in shares, those positions are equally liquid. If the chef would not invest in PetSmeds in 2022, he should not have been holding it in 2022. When you hold a stock, you are deciding every day that this stock is how you want to allocate that money, and necessary location made the decision to hold a stock dying like a dog with parvo. A loss of almost all your life savings is not something that can be easily brushed off. Money he'd be stashing away since he was a child. Birthday cash, holiday money, savings accounts, and every scrap he could set aside from his chef gigs over the years, all boiled down into one single trade. When everyone around him was panic buying masks and hand sanitizer, he thought he'd found a golden ticket to financial freedom. Instead, that ticket was a one-way ride to WallStreetBets infamy. He watched it burn, helpless. His $475,000 turned into a smoldering pile of ash, and all he's got left is $53,000 and a broken dream. If he had just held his same indexed ETFs from January 2020, his portfolio would be about $920,000. So what's the chef up to now? As of early September, the big man declares he's about 10 years from retirement age, meaning he needs to bounce back fast. He dumped his entire remaining portfolio into GBTC, Grayscale's Bitcoin ETF. With an entry price of just under $43, he's up a good $6,000. Only $413K to go before he breaks even. His $53K could have bought him almost an entire Bitcoin, but with the ETF, he shields himself from the risks of self-custody with the trade-off of another company holding his keys. If the Bitcoin fair price model is to be believed, he could potentially have $1.3 million in 10 years. This would more than indemnify him of his losses. However, as other members of WallStreetBets pointed out, crypto is very volatile, and chasing losses is rarely a winning strategy. Can he bounce back from this? It's Bitcoin, so it's possible. But even if he does, no amount of green in the market is going to erase the PTSD from that $426,000 implosion. It's time to get back in the kitchen, my man. Now the moment we waited for, our #1 Dankest trader of Spooktober. Circa Muse is a longtime lurker who first appeared in 2021 with a single comment about Lululemon and then did something unthinkable. He touched grass and didn't come back to Reddit for several years. However, in the very beginning of 2020, Mr. Muse was quietly firing up his trading account. As his balances settled, COVID-19 burned through the US with ferocity, making it easy for anyone to print paper with puts. This perfect timing to join the market laid the foundation for his consistently bearish outlook that would go on to shape his entire trading strategy. But the COVID crash was short-lived, and Circa Muse's early success could not be repeated in the raging bull market that followed. The doomer and swing trading Twitter accounts he followed continued to reinforce the idea that the bull market could not be sustained. Each of his failed bearish trades only deepened his conviction that a major correction was around the corner, and his inability to join the bull gang left him perpetually on the losing side. Despite many failed trades, Circa Muse continually added liquidity over 4 years by pouring his paychecks into a series of bearish positions that by mid-2024 had left him in the red by a jaw-dropping sum of $150,000. We don't know his salary, but Papa Muse says that his losses over those 4 years exceeded the amount he was earning at work, indicating a loss of more than 4 years of salary. By July 2024, he only had $684 left in his account. He faced having to work at Wendy's on the side to earn back his lost tendies little by little, and starting off with less than $700 to make back 6 figures is a Herculean task that few have ever achieved. This is where his real journey began, starting off at a sum that most Robinhood users are all too familiar with, that we will see the true extent of human desperation. For as MILF lover Sigmund Freud once said, "Out of your vulnerabilities will come your strength." With his back against the wall, Circumuse wouldn't have been faulted for giving up on trading and taking a much-needed break. Instead, he did the opposite by embarking on a high-stakes journey that started by going all in on options trades, a moonshot play to either become rich or go bust trying. Placing his remaining $684 on call options before Nvidia's Q2 earnings report was a final gamble, but strong earnings sent the stock higher, bringing much-needed relief to his portfolio. He then switched gears to buy puts on Amazon. When Bezos announced that Amazon delivered much less Chinese junk than they had in the previous quarter, the stock cratered and Muse's puts swelled. His next play was crowd puts, full port, but he was blessed with unimaginably lucky timing. The company announced that they had accidentally bricked the internet, and his puts turned into gold. He then pivoted to Netflix calls, which likewise hit a home run on surprise subscription growth numbers. With luck that could give the devil himself a run for his money, Muse's next gamble on Coinbase puts sent him to a never-before-discovered level of atmosphere. Each gamble defied all odds, and after a series of huge wins, Circumuse's portfolio sat at $426,000. He was indemnified thrice over, but it was not enough. Just before the weekend, the big shot suffered his first loss of $200,000 on Triple Q puts, but quickly switched positions to fully recover before market close. Here, with his rapid recovery, is where Muse began to feel invincible. Even a $200K dip could not bring him down. His HP was maxed out. His next huge trade came to life on August 2nd, 2024, when Carvana was trading for around $140. Convinced that the daily chart on Carvana signaled an impending drop, Circumuse bet his whole portfolio of more than $400,000 on weekly Carvana puts with a $135 strike expiring on the 9th. He believed that recent gains after earnings would not hold and bet everything on a sharp decline. His conviction would be rewarded. On August 5th, a flash crash in Japan sent stocks tumbling. As the market opened, Carvana tanked to about $120, and the price of those puts skyrocketed from $4.35 to a bit above $15, netting him more than $1 million in a single day. By August, Circumuse's once emaciated IRA had swelled to an astonishing $1.3 million. Some members of WallStreetBets accused him of karma farming, not believing his outlandish gains. However, he posted receipts showing both trade confirmations and trading volume, corroborated by actual market data, proving his haters wrong. Although the thought of being responsible by buying a $750,000 house crossed his mind, he ultimately decided that a house wasn't good enough. $1.3 million was such an odd number to stop at. What if instead he could hit $1.5 million? That's a nice round number to shoot for. His ambition, or perhaps his avarice, told him that Apple would follow the rest of the market down in the Japanese crash. As tech stocks got bonered in early August, Apple puts were certainly going to be an easy flip. All he needed was a 10% gain after all. As Apple opened red, Mr. Muse went all in on puts, only to see the stock bounce back. He sold the puts for a huge loss, then re-entered after Apple went down again. In and out of positions, he cleared his head, took a huff of paint solvent, and decided to simply calm down and hold his puts overnight. The next day when the market opened, Apple didn't crash. It soared. Our man believed this would soon reverse and bought Triple Q puts for additional wind in his sails, alongside another round of failed Carvana puts. It was a worthless effort. The market began to realize that Japan raising interest rates by a fraction of a percent was not going to cause another 2008. There was only one possible outcome.
Cast him in.
Tumbling, burning, and white-hot losses, Circumuse suffered unspeakable pain, relentless agony. His gains ceased to exist. Only this torture and a deepening hatred of the avarice that condemned him to this loss. A home, financial freedom, and a secure life was shattered from concrete reality and sent straight into the spectral realm. The sting of knowing he could have clinched generational wealth became more and more profound. By his own admission, all he had to do was hold indexed ETFs. He could have compounded his gains into many millions just by having patience. In the face of his egregious mistake, he became aware of what he had done, and the burden of this error became his cross to bear. The silver lining from this dark cloud came when he took to enjoying the simpler things in life, finding solace in the karma he gained, and joking about applying for a gold medal regard in the WallStreetBets Hall of Fame. In spite of it all, Circumuse was last seen commenting on a 2007 RuneScape post, giving some kind of advice to the devs about a difficult achievement. He's alive. Lord Circumuse, your ability to go from abject poverty to unparalleled wealth is worthy of fervent admiration. Yet your ability to piss all over your gains and set yourself back to the lower middle class is worthy of only the utmost respect. For the world's shortest round trip to $1 million and back, it is my honor to award you the crown of regards. May you wear it well.
Who wants to be king?
Thanks for watching, everyone. Don't forget to subscribe and join our free Discord for more action. See you next time.